Stop scrolling. Seriously. If you're a senior, if you own a home, or if someone you love is retirement age and living on a fixed income, you need to hear what I'm about to tell you right now. Because what's happening after April 15th of 2026 is something that the mainstream news is barely covering. And it's something that could blindside hundreds of thousands of older Americans who have no idea it's coming. Most people don't realize what's happening until they get a letter in the mail, or until their bank account gets hit, or until it's already too late to do anything about it. So stay with me. I'm going to walk you through all of it, step by step, in plain English. No jargon, no confusing tax language, just the real story of what's going on and what you can do right now to protect yourself or someone you love. Let's start from the beginning, because this part matters. For decades, millions of American seniors have been living in their homes on fixed incomes, Social Security checks, small pensions, maybe a little savings from a lifetime of hard work. These are people who paid into the system their whole lives. They raised families in those homes. Some of them have been in the same house for 30, 40, even 50 years. And for a long time, many of them thought that once the mortgage was paid off, the house was theirs. Safe, secure, something they could leave to their children. But here's what a lot of people don't realize. Owning your home outright doesn't protect you from everything. There's one thing that never goes away as long as you own property, and that's property taxes. And the IRS, along with state and local governments, has a set of rules and enforcement mechanisms that most seniors have never fully understood. Rules that, in 2026, are being tightened in ways that are putting real people at real risk. Now, I want to be very clear about something before we go further, because I don't want anyone to panic unnecessarily. This is not about the IRS randomly coming after seniors for no reason. This is about a confluence of things: rising home valuations, changes in federal tax enforcement priorities, the expiration of certain pandemic-era relief provisions, and a new push by the IRS to go after what they call non-filers, people who haven't filed tax returns, sometimes for years. And when you mix all of that together and you layer it on top of a population of older Americans who are already stretched thin financially, you get a situation that is genuinely dangerous for people who don't know what's coming. So let's break it down. Here's the first piece of the puzzle, and this one surprises a lot of people. The IRS has been quietly ramping up enforcement since 2023, when Congress gave them a massive funding boost. We're talking nearly $80 billion over 10 years, specifically to increase audits and go after people who owe back taxes. Now, most of that money was supposed to target wealthy tax cheats, and that was the political promise. But here's what actually happened. The IRS, short-staffed and working through a huge backlog, has been sending out automated notices to a much wider group of people. And one of the groups getting flagged in large numbers? Seniors. Specifically, seniors who haven't filed returns in recent years because they believed, sometimes correctly, sometimes incorrectly, that their income was too low to require filing. Stay with me, because this is where it gets really important. There's a common misconception among older Americans that if your only income is Social Security, you don't need to file a tax return. And in some cases, that's true. If Social Security is your only income and your total income falls below a certain threshold, you may not be legally required to file. But here's the thing. That threshold changes every year. And in 2026, those thresholds are shifting again because of the expiration of some of the expanded standard deductions that were put in place under the 2017 Tax Cuts and Jobs Act. Some of those provisions are sunsetting, meaning they're expiring, meaning the rules that applied last year don't necessarily apply this year. And if your situation changed, if you took a small distribution from a retirement account, if you sold anything, if you received any kind of income beyond Social Security, you may now be in a category where you were supposed to file and didn't. And the IRS automated system doesn't know your story. It just knows the numbers didn't match up. Let me give you a real-life example so this clicks. Imagine a 74-year-old woman. Let's call her Dorothy. Dorothy lives alone in the house she's owned since 1987. Her husband passed away a few years ago. She gets about $1,400 a month in Social Security. That's basically it. For years, she didn't file a tax return because her income was low enough that she wasn't required to. But in 2023, she took a $5,000 distribution from a small IRA account her husband had left her just to cover some medical bills. She didn't realize that distribution was taxable income. Nobody told her. She didn't file that year. Fast forward to 2026, and Dorothy gets a letter from the IRS saying she owes back taxes, penalties, and interest. The total? Several $1,000s. She doesn't have it. And because property tax authorities in her county also have a lien process tied to federal tax debts in certain states, suddenly the home she's lived in for nearly 40 years is at risk. That story is not hypothetical. Variations of it are playing out across the country right now. And here's what makes it even more complicated. The connection between federal tax debt and home ownership isn't always direct, but it's very real. Let's take a step back and explain how this works, because I think a lot of people don't fully understand the mechanics here. When you owe the IRS money and you don't pay it, the IRS can file something called a federal tax lien. A lien is basically a legal claim against your property. It's not immediate. It doesn't mean someone shows up at your door the next day, but it attaches to everything you own, your bank accounts, your car, and yes, your home. Once that lien is in place, it can affect your ability to sell the home, refinance it, or pass it to your heirs cleanly. And if the debt goes unresolved long enough, the IRS has the authority, which they rarely use but absolutely have, to seize and sell assets, including real estate. It doesn't happen often, but it does happen. And for seniors on fixed incomes who can't just write a check to make the problem go away, the situation can spiral very quickly. Now let's talk about what's specific to 2026, because this is the part that's new and this is why we're talking about it today. April 15th, 2026 is the filing deadline for the 2025 tax year. That's the day by which most Americans need to have filed their federal income tax returns or requested an extension. And right around that date, two things are happening simultaneously. First, the IRS is finalizing its enforcement actions on people who never filed for 2022 and 2023, the pandemic-era years where a lot of people fell through the cracks. The IRS gave extra time, issued notices, sent warnings, and now the grace period is over. If you didn't respond, you're now in active collections. Second, and this is the part that's really significant, several tax relief provisions that benefited lower-income seniors are either expiring or being reduced in 2026. The enhanced child tax credit is gone for seniors, obviously, but more relevantly, some of the expanded senior deductions and the above-the-line medical expense deductions are being recalibrated. What that means in plain English is that some seniors who didn't owe taxes last year might owe a small amount this year. And if they don't know that and don't file, they could unknowingly step into the same trap that Dorothy did. And here's something that almost nobody is talking about. Many seniors who are on Medicare and Medicaid receive what are called cost-sharing subsidies or extra help programs. Some of those programs have reporting requirements tied to your tax filing status. If you stop filing, even if you think you don't have to, it can affect your eligibility for these programs. So it's not just about the IRS coming after you for money. It's also about losing benefits you're already receiving and counting on. Here's what a lot of people don't realize. The IRS actually has a program called the Volunteer Income Tax Assistance Program, VITA, that provides free tax preparation for people who earn under a certain income level, which covers the vast majority of seniors living on Social Security and small pensions. It is completely free. It is staffed by trained volunteers who are certified by the IRS itself, and most people have never heard of it. If you or someone you know is a senior who hasn't filed in a few years or isn't sure whether they need to file, this is the first phone call you should make. You can find a VITA location near you by going to the IRS website at irs.gov and searching for free tax return preparation. It costs nothing. It could save everything. Now let's talk about the property tax piece, because this is the other side of the coin and it's just as important. Even setting aside the federal IRS issue entirely, there's a separate crisis happening at the local level that's directly tied to seniors losing their homes. Property values across the United States have skyrocketed over the last 5 years. In many parts of the country, homes that were worth $150,000 in 2019 are now assessed at $280,000 or more. And because property taxes are typically calculated as a percentage of your home's assessed value, that means property tax bills have gone up dramatically, sometimes doubling, for homeowners who haven't sold their homes and haven't seen a single dollar of that increased value in their pockets. For a senior on a fixed income, a property tax bill that jumps from $2,400 a year to $4,800 a year can be catastrophic. That's $400 a month they suddenly need to find somewhere in a budget that was already tight. And here's the part that breaks my heart a little. Most states have property tax exemption or freeze programs specifically designed to help seniors. Programs that cap your property taxes, freeze them at a certain level, or even eliminate them entirely if your income is below a certain threshold. But these programs are dramatically underutilized. Studies have shown that only a fraction of the seniors who qualify for these programs actually apply for them. Because nobody told them. Because the forms are confusing. Because they didn't know it existed. If you are a senior homeowner, or if you have a parent or grandparent who owns their home, I want you to stop what you're doing after this video and look up your state's senior property tax exemption. Every single state has some version of this. Some are incredibly generous. In some states, qualifying seniors pay zero property taxes. Zero. But you have to apply. It doesn't happen automatically. And in many states, the application deadline runs right around the same time as the federal tax deadline, April 15th or shortly after. So the window is open right now, and if you miss it, you're waiting another full year. Let me also say a word about scams, because whenever there's a news story about the IRS and seniors, the scammers come crawling out of the woodwork. I need you to hear this clearly. The IRS will never call you on the phone and demand immediate payment. They will never threaten to send the police to your house if you don't pay right now. They will never ask you to pay using gift cards or wire transfers or cryptocurrency. If you get a phone call from someone claiming to be from the IRS and they are pressuring you, threatening you, or asking for unusual payment methods, hang up. It is a scam. The real IRS sends letters through the mail. They give you time to respond, and they have a formal process. If you get a letter and you're not sure if it's real, you can call the IRS directly at 1-800-829-1040 to verify. Always verify before you pay anything to anyone. Now, what should you actually do right now? I'll walk you through it step by step. First, figure out your filing status. Ask yourself, did my total income in 2025 from all sources, including Social Security, any pension, any IRA distributions, any part-time work, any rental income, anything, exceed the filing threshold for my age and filing status? For 2025, the general rule is that if you're 65 or older and single, the threshold is around $15,700. If you're married filing jointly and both spouses are 65 or older, it's around $30,700. But these numbers shift with the expiring provisions I mentioned, so please don't just take my word for it. Verify with a tax professional or through the VITA program. Second, if you haven't filed for 2022 or 2023 and you had any income at all in those years beyond basic Social Security, you should address that now before the IRS addresses it for you. Filing late is always better than not filing. The penalties for filing late are much smaller than the penalties for never filing at all. And in many cases, if you're owed a refund, the only way to get it is to file. The IRS isn't going to send you money you're owed if you never ask for it. Third, look into your state's senior property tax relief programs right now. Don't put it off. A quick search for your state name plus senior property tax exemption will get you started. Many county assessor websites have the application right there online. If you have trouble navigating it, your local area agency on aging, which you can find through eldercare.acl.gov, can often help you with the application for free. Fourth, if you've received any letter from the IRS and you've been ignoring it because it scared you or confused you, please don't do that anymore. I understand the impulse. These letters are intimidating, but ignoring them makes everything worse. Every day you wait, interest and penalties grow. The IRS is actually quite willing to work with people who come forward proactively. They have payment plans, they have hardship programs, they have an offer and compromise program that allows some people to settle their tax debt for less than they owe. But you have to engage with the process. You have to respond. And fifth, talk to someone. I know a lot of seniors are private about their finances, especially when it comes to debt or anything that feels like a failure. But there is absolutely no shame in asking for help navigating a complicated tax system that even financial professionals find confusing. The VITA program is free. The Area Agency on Aging offers free counseling. Many nonprofit credit counseling agencies can help you understand your options at no cost. You don't have to face this alone, and you shouldn't try to. Here's the bigger picture I want to leave you with. We are in a moment right now where a lot of things are changing at once. The tax code is shifting, home values are high, the IRS is ramping up enforcement, and relief programs are expiring. For younger, higher-income Americans with accountants and financial advisors, these changes are manageable. For a 78-year-old widow living alone on $1,400 a month, they can be devastating. And the saddest part is that most of the people who are most at risk are the ones who are least likely to have seen a video like this, which is exactly why I'm asking you, if this was helpful to you, to please share it. Share it with your parents. Share it with your neighbors. Share it with that friend from church who you know is living alone and probably hasn't thought about any of this. Because information is protection, knowing what's coming gives you a chance to get ahead of it. Not knowing leaves you completely exposed. The American dream for an entire generation was to own your home, pay it off, and spend your later years in security and dignity. That dream shouldn't end because of a tax notice that nobody explained, or a property tax bill that nobody warned you about, or a benefit you qualified for but never knew to apply for. These are solvable problems, but only if you know they exist. So please, don't leave money on the table. Don't let a solvable problem become an unsolvable crisis. Check your filing status. Look into your property tax exemptions. If you've got IRS letters sitting in a drawer, take them out and deal with them. You have options, I promise you. And share this video with someone who needs to hear it. Because right now, the most powerful thing any of us can do is simply make sure the people we love have the information they need to protect what they've spent a lifetime building.